Hey there, this is Hugo. Welcome back to Crypto Talk with Hugo. If this is your first time watching this channel, please go ahead subscribe. I post about 6 to 7 times a week, and I bring my opinion about the stock market and cryptocurrency. And if you like the value of this video, smash the like button. It does help so much. So today we're gonna talk about what we expect about the Fed meetings. A lot of people are scared, the market is scared. We don't know exactly what's gonna happen. We just have hopes. So before we start talking about what's the outcome of this meeting, let's talk about what's the Fed's job. And they have six basics that they have to follow. Is They need to work on the high employment. They need to work in economic growth. They need to work in the price stability. And the fourth one is going to be interest rate stability. The fifth is the stability of the financial market, so the stock market plus other markets, and stability of the financial exchange. So they have these 8 meetings scheduled per year where they gonna talk about the economics of the country and what's the goals for the next uh, few months, few years, and what's the plan that they're gonna do to, for example, right now to work the inflation and to help the economy to continue to grow. So in this meeting, specific in this meeting, they're gonna decide about the interest rate, and that's they're gonna decide about a lot of things, but the focus of the market is this interest rate, and that's not something that just happened right now. Back in November of 2021, the Feds decided to taper down the buying of the bonds. And like they were buying the bonds since 2020. They were putting money on the market, so people will have money, and whenever they buy bonds, the interest rate goes down. I'll explain a little bit more about that, but so there's more money flowing. But now they're gonna stop tapering down all the way to March. Supposedly ends in March, the buying back of the bonds, and they are stopping by 15 billion every month since November last year. So it's coming to the point that where March they're gonna stop. They're not gonna buy any more bonds. So this means no more money. And how does this help the economy? So if the Fed, let's explain this a little bit. If the Fed buy bonds, it increase the money supply to the economy by swap of the bonds in exchange for cash to the general public. That's us. In the other side of the coin, if the Fed sells the bonds, that's then decrease the money supply by removing cash from the economy in exchange for the bonds. Okay? So right now they're gonna stop to buy bonds. So if they're not buying bonds, if like as the Fed purchases more bonds, there are consequently fewer bonds available in the market. This will cause existing bonds to increase in price. Since the price of the bonds and interest rate are inversely correlated, this causes long-term interest rates to decrease. But if the Feds are not buying bonds there, then the interest rate increase, and that slows down the market. That explains some of the jobs of the Feds. Now we need to figure out what we expect from this meeting. So what do I expect in this that Jay Powell is gonna come out and tell? I expect that they're not gonna change much. They're gonna still have the raise of the rate starting March, and this is gonna probably calm down a little bit the market. It's not gonna solve, but the good thing is I think the sellers market is losing power, and I believe that the market's already close to the bottom. I don't think it's on the bottom yet, but it's close to the bottom. So it's a good time to, if you think about buying, make sure to first follow up with financial advisor. Second of all, you want to make sure that you buy companies, stocks of companies that are solid. You don't want to get a prospect. You want to get a company with a good balance sheet, a company that expect to be like they're profitable and expect to be even more profitable in the next few years, and then with good fundamentals. So balance sheet, profitability, and fundamentals are the most important things that I'm looking at company right now. Basically, I'm buying the boring companies that don't grow as much, like P&G. And I know the last couple of days they've been down, but those are companies that I'm buying. The other way that the Feds can come out and say they're gonna announce they're gonna raise the rate sooner. I really don't believe they're gonna start as today. That J Powell will come out and say, "Oh, we're gonna increase the rates as this month or February." No, I do not believe, but there's also a possibility. It's it's on the table. Everything is possible. The inflation is out of control, so the Federal Reserve need to act on that. And the other thing that probably will come out this Fed meeting is they're gonna increase the rate more than twice. And they're talking about 3 and 4 times. Probably it's gonna be about 3 to 4 times. Maybe on the third time they're gonna analyze how the market is reacting, and then they decide about the fourth. But it's all about the committee, what they decide. My opinion on how the rate hikes will help the economy. I do believe that will slow down the economy, so the inflation is going to go down. And I do believe on the U.S. market and the U.S. economy. And I think with time, we will grow and grow again. If you're new to the market, it's not this is not the first time it happened. Back in 2000 with the tech bubble, happened in 2008 with the house bubble. Whatever bubble you want to call right now, this happened. And back in 2000, the stock price was cheaper than it is right now. So as you can see, as we have this dip, we go up again and again. Thank God that the U.S. economy is so strong and has amazing people work on. So I'm faithful, and I do believe that in the long run, we have a lot to gain. And right now is it's a sell-off market. So whenever we talk about, and I talk about this almost in every video, everybody went by when it's dipping down. The stock market is cheap, and now's the time. It's cheap now. So if you think about buying, follow up with a financial advisor and buy, because it's cheap. So if you see any value in this video, go ahead, subscribe, press the like button, put a comment. I did struggle a little bit to put this out. I don't know why. My line of thoughts are a little bit confused, but I've been trying to improve in every video. I just started this YouTube channel, and I hope that I can bring better content with each and every single video that I put out. Okay? You have a great day, and I'll see you tomorrow. Bye.